Hey, good morning, everybody. Happy Friday. Let's wait to see if JP jumps in here. Woohoo! Just real quick off the bat here, I am watching for potential opportunity here in crude oil, and they're getting close to an area of interest, and okay, did I lose? Check. All right. So anyway, we're close to an area of interest here. Let me get my pen tool. Here's overnight low to the high. We've done $1.22-ish, and we are expecting $1.22-ish. We basically hit the expected range. Volume point controls here. So what we're looking for is what we call a fade trade back into the VPOC. We're actually, clean up these singles and see some rotation take place. But so far, we're still one time framing higher. So kind of watching to see if we can get up here and then reject and see some sellers really step in. And then that could give us the opportunity to be short back toward 55 is kind of what I'm looking at right now. Oh, there he is. There's the man.
Good morning.
Good morning.
How are you?
So not bad.
Good.
So we're watching that, and then let's talk index. So we have non-farm payrolls this morning. Expand this profile. Actually, let's see. A better way to see that would be, let me go to this different chart over here. I've not done anything in the equities for a couple reasons that I will point out with haste here. So one, contextually where we are, the most traded price of the last week is at 80.90. The most traded price for the last month is 79.37. So price is above value, and as a general rule, I don't buy above value on multiple time frames. But I have to respect kind of what's happening overall, and that is that the order flow is to the buy side thus far. We came down and kissed yesterday's range, and then found buyers. So unless we see some subsequent failure, that would be we're just kind of on the sidelines. The play might actually be till next week. But couple things to point out. So right here, 8100 is the scene of the release of the non-farm payrolls, and then this was all China trade rumor stuff. So when you get a what we call a binary event, or this kind of news that comes into the market, just mark these, have them as a reference, and they're kind of in play until you kind of trade back to them, and then they can often become places to come back and repair. But right now, I mean, we've successfully migrated value higher for today. There's a really weak high. The VWAP is sloped to the upside. Order flow is to the upside. So I'm kind of looking at this as like a pullback. If we come back here and let's see where if they come back and kiss VWAP here, that might be a place to buy it. But again, per my rules, I will not buy anything when I'm in this type of a relationship to price. So I'm really more looking for failure and an opportunity to be short, but I got to see that happen on a longer time frame first. So I need to see a lower low on a 30-minute. I need to see a change in the overall order flow, And right now they're doing a good job moving higher. So until that happens, we're on the sidelines. And just looking at the other indexes here, we've got IB high extension in the Dow. We have IB high extension in the Russell. Only the ES and NQ are still inside their IB, but everybody's got buy side order flow in control. So until that changes, there's nothing to do. So that's why I'm more focused on crude oil at the moment, just because there's potentially more opportunity there. We do have 4 Fed speakers, count them, 4 Fed speakers yet this afternoon. They all kick off around 1 p.m. Eastern. So we could trend or kind of keep moving higher up into those. And then one other product that I've been kind of marking has been live cattle, and this product has been on a trend higher for quite some time, and was looking for some sellers to come in and shut the auction off. We actually got that yesterday, and so now auction moves, you get a shut off, and so now I'm expecting this to kind of establish a range. So I'm actually kind of watching to see if they can trade back up into this area for a short back, really towards 115, 150 is the area that I'm particularly interested in. So we'll see how that plays out. Aside from that, that's the deal on the non-farm payrolls. When you have a non-farm payroll, so let's look at bonds here real quick, because the release of the non-farm payrolls occurs after the open in bonds. You typically get a wide first hour, which today was no exception. But then the equities don't really get to deal with it until the open, and so you just never know what they're going to do. But definitely mark where the release was, and you can see we're quite a ways away from that release at 8100. So far they're buying the release, getting a little mojo, right, JP?
Yes, it's a good day to sit on our hands at this point.
It's a good day, yeah. And this was part of our plan. I mean, we kind of came in here and we were like, hey, if we don't see something really, see them really step in after non-farm payrolls, it could just be a day that they drift higher into the close, and which that means that there's really nothing to do. So what I've been just doing is I've been trailing every 30-minute low with an alert. And if we make a new 30-minute low, then I might be interested in a potential rotational play. Again, I'd be looking short, but until that happens, I am not going to play. I'm going to watch with great interest.
Yeah, good plan there.
And then just from a volume standpoint, so we're below average volume. This also can add to the drift higher. And by the way, it's okay. Like if they drift higher, it just means that they put them in more extreme into next week, and the real big swing might not come, today, but it may come Monday or Tuesday. Once we're past non-farm payrolls, we're past big earnings, we're past FOMC. We can see right now we're about 20,000 contracts below average volume in Q for where we are typically at this time of day. Let's check in on the ES here.
Yeah, and Josh makes a great point. If we drift, the Russell's drifting right now, and we could continue this move up on NASDAQ and the ES. And if that's the case, then we just don't have a trade today. And that's part of trading, is just waiting, and that puts us actually in a really good position, hopefully coming into Monday, especially if they were to gap it up Monday too. That would be awesome.
That would be awesome.
It's almost the ideal situation.
Yeah. Looks like ES has got about average volume, only about 6,000 below average. So that's pretty good, actually. They were above average for the first 2 half hours, and we're just starting the last one. So yeah, it could be a boring.
Yeah,
could be a boring morning, gang.
It could be, and that's fine. I mean, okay. So we talk about this in our community all the time. And I sort of beat that drum pretty hard, is that, you know, sometimes there's not going to be a trade. We can't force things that are not there.
Right.
I mean, we can always try to find a trade, but it's just that, trying to find one. And if it's not, you know, if you don't have your plan and trading, you know, with that plan, and if you don't have a plan, obviously that's something we can help you with. But if you don't have that plan and you're not trading, you know, in lockstep with that plan, then you're just making stuff up, but you're going to end up losing money. It's going to be painful. So a lot of what we do, if we don't have it very clear, you know, and there's certain rules and stuff like that that you can put into your plan, we're going to sit on our hands, especially on a Friday,
Mm-hmm.
because last thing you want, and um, I guess believe somebody like myself who's been through that before, and Josh has too. Listen, the, what qualifies us to sit here and tell you things is two things. One, we've been in this business for a long time, okay? And two, we've made every mistake in the book.
Yep.
Guaranteed. If there's one guarantee in life, I
Mm-hmm.
guarantee you that one. We've had losses that hurt. We've done stupid things. We've had things that gone wrong, um, you know, against our will, and we had to make them right. Um, and that's just part of it. And so what we hope to do is help you guys cut your learning curve and not have to feel as much pain as we did. But there's certain things you have to do, right?
Yep.
And like today, you have to sometimes sit. That's part of it. And
Yep.
that's okay. It makes, I actually don't mind it someday. This is a hard week to trade, actually. This is a very difficult week to trade. We had so much stuff going on. Next week actually should be a lot easier because we don't have much going on, just regular news events, and then we only have a couple Fed heads talking. But this week, think about what we had. We had major earnings this week. We had Google, Apple, and Facebook. We had FOMC on Tuesday, announcement on Wednesday. Jerome Powell spoke on Wednesday. We had non-farm payrolls this morning. That is a full week, and things can get a little weird in that week and makes trading a little bit more difficult. So yeah, this is a tough week. So on a Friday like this, I'm okay with saying, yeah, we're just sitting out waiting.
Mm-hmm. Yeah, it's a really good point. I mean, it's that there are better weeks and better times to trade than others. Um,
Yeah.
this is one where so the auction will do what the auction does, and then unless you get new information into the auction, and what that new information does is it can shift the perception of value. So specifically, like a week like this week, where you knew that you had a number of releases on deck, um, that can set the stage for all kinds of, like, the auction will do its thing, and then you know another release is coming, and that's going to change the perception, and then everybody's got to kind of rebalance off of that. And when they're just one right after another, it's a good place to just go, unless I just see something close to a layup, I'm not going to do anything.
Yeah, and today, listen, we always want to have you guys take something away from today so you can put it into your trading tomorrow, or not tomorrow, but Monday. And here it is. Here's today's. You're going to make the bulk of your money on a couple trades every week or a couple trades every month. I want you to think about that for a second. You're going to make the bulk of your money on a couple trades per week or a couple trades per month. And maybe if you trade larger time frames, be a couple trades a quarter.
Yeah.
Okay, it just depends. So if you're an intraday trader, you're going to probably go, and if you understand baseball, right, it's going to be single, strikeout, single, walk, double, single, home run, home run. And that's what a week could look like for you with regards to your trading. So when you're looking for trades, you better be looking at your plan and following that, because if you do, you're going to get a couple of those really good trades throughout the week, and that's going to be the bulk of your money for the week.
Mm-hmm.
So really, when it comes down to it, if you look harder for the right trades that are in your plan rather than just any trade to make money, because this is not about making money. The money is the byproduct. And that's, I guess, another takeaway would be the money is the byproduct.
Mm-hmm.
What's important is executing on your plan correctly. If you do that, the money will come.
Yep.
Doesn't matter what the win rate is or anything. Well, it doesn't. And here's why. If you're managing your plan, you're managing your risk. And if you manage your risk correctly, you have your, what we call your risk reward, or your RR, in line. And then if you're suffering from something like, hang on a second. We had an individual in our community this week, and um, he had talked to us about taking his profits too early because he was scared. It didn't feel right.
Mm-hmm.
Um, well, psychologically, and there's a lot to go in psychologically, and this is not the time or the place. We talk about that in our community quite a bit as well. But what that means is this, is that that person hasn't really owned that trade plan or trade setup, and they haven't been through that trade enough times to feel comfortable enough to trust it, because it is about trusting your plan and your trade setup. And 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 what that also tells me is they just found a trade and took it, and they were like, I don't know if this is going to work out or not. Well, we never know if any trade's going to work out. The market's going to do what it's going to do, like Josh said.
Yep.
However, if you have enough, there's a couple trades that I don't care what's going on in the world, I'm taking that trade because I know it so well, and I'm going to trust it. So you trust your stops, okay, and then you look for your targets, and then you let it happen.
Mm-hmm.
Means you getting up and moving away from the screen. That means that. If it means taking deep breaths, that means, humming and doing yoga. I don't care what it takes, but those are things you have to do. I mean, you have to understand that. So if that's something that you suffer from, then we can work through that with you to help you to keep that correctly. So here's how I look at that. So, and I want you to think about this too. And by the way, if you guys have questions, go ahead and drop them in here. And if you think I'm nuts, but I think my years of experience and making these mistakes myself would, definitely help you with that. And what I mean is that if you're always taking, okay, let's say on the ES, you take 1 point out of the ES and you go, okay, I was so worried it was going against me a couple ticks, but then it went in my favor a point and I took the point. Well, if you look at that chart an hour later, did you get your target that you were looking at? Most likely, yes. What? It doesn't matter. If you had your stops correctly, it doesn't matter. But what happens when you start doing that over and over again? You take that 1 point, 1 point, half point, 1 point, 2 point. What happens at one time? When it quickly goes against you, you pull your stop. You're like, it's got to come back. It's got to come back. And it doesn't come back. Okay. You take a big ripper is what we call, or what we call a digger. All right. If you're a mountain biker, you take diggers all the time. It's like falling off your bike. Well, this is a digger, and you take all those wins and you're like, well, my win percentage is 70% and 80%. Man, this is great. But you take that one loss because it gets away from you. And now you have no money. You've ran it all out. Okay, all those profits are gone, but you still have a win percentage. How's that? Because you don't have your risk reward down. So it all ties together. I guess I'm going a little bit sideways here, but it all ties together, guys. So take away from the markets that sometimes it's not a day to trade, especially if it's in your plan. And again, the big thing is, listen, if it's not in your plan, let's start working on the plan. All right, that's all I got. Have a great week. See you. No.
Yeah, true. I'm shopping, by the way. I'm just looking for other stuff because nothing's really said. I'm looking at soybeans here. I'm kind of interested if they can take out the first hour's high, pull back to 935 and hold. I might be looking to be long for 941.50. But I got to see him trade above. Got to see him expending this first. All right, something just.
Man,
oh, there we go. There's the IB high. So now I'm looking for a pullback to 35.
IB high on what?
Soybeans.
Oh, I was gonna say, we're so far away from the IB on NASDAQ.
Yeah, so I'm looking for pullback to 35 that holds. If that comes before we get to like 39.25 and then 41.50, and looks like just gonna make sure.
Yeah, it's ripping.
Yeah, I like I like that one.
Isn't it funny how 930 is holding on the soybeans?
Uh-huh. Where did
Josh is working soybeans. Does anybody have any questions? I mean, listen, I'll be the first to tell you, there are no questions that are bad. Okay, especially in trading. This is not like in school where you're afraid to raise your hand because you don't want to be wrong. Listen, we've made every mistake. Believe me, if you have the question, we've either made the mistake or we understand what you're talking about. And guess what? Ask away, because it'll be the greatest. Oh, I don't want to ask it because it must sound stupid. Sorry, I've already done that for you. So I've already acted stupid for you. So don't worry about it. Just ask away. So
yeah.
if you have any questions on products or the profile or just trading in general, psychology, whatever it may be. And if there's no questions, I'm going to think we're on mute talking to ourselves. And
I don't think they're going to give me a chance to shoot. I don't think the beans are going to give me a chance to pull back.
yeah,
It looks well. It's right. This is a move right from balance.
yeah. And well, that would be expected then. Next week we have crop report, I think.
Yeah.
Let's check that out. I believe it is next week.
This crude chart is starting to become the potential for a structure cleanup. So you can see these single prints right here. I mean, we got to stop. I mean, we have been trending since the open, or I'm sorry, since 8:30 Eastern. They've just been at it. So, and who knows when that'll stop. I mean, we actually, I mean, we have some levels up here at 55.73 to 80 that are possible on a trend day. So
yeah, I know the way that this thing's hugging that 80 MA. It's those algos have got it right now. So just
yeah,
they're buying every dip on the 8. So
every touch it, yeah, every touch of that.
So that's a pass for me right away.
Yep. Yeah, unless you see a significant break.
Yeah.
They're just doing it well. The other one on that one, and let's look at the, I'm assuming, but we're going to look at the chart here just to confirm it. All right, so your question about the charting packages here, just a second, I'll tell you what.
Software package, please. Okay, good question. How do you determine if you want to set a buy stop or sell stop anticipated eye break? And how do you manage a trade if you get triggered in regardless of stops? Okay. Lars, that's a great question. While Josh is working on his chart, I'm going to answer that. And I want Josh to pop in here and answer that as well. There's a couple different ways you can do an IB break. All right. You can let it break and pause and come back. In other words, drop down to a lower time frame, like a 5-minute or something like that, and then look for a pullback. Okay, or you can let it, or you can take it on the break. All right, and then how do you set your stops on that? Or we look at the developing POC, and we determine based on either one of those where the best stop would be on that. Plus, we have to determine, more importantly, where could this go? If we don't have, if it doesn't have room to go, well, for one, we're less likely to take it. That's how we determine which side. Plus, we have, we want our bias. Where's the bias? Like today, the IB high today is it's clear and free up above there. There's nothing stopping it at this point. However, we are really stretched or getting stretched at this moment with the NASDAQ. So you could still take the IB break high. However, if we rolled down, took out that low, I'd be more on the low than the high on the deal. It's just bias, basically. Think about the time fluidity. Hold on one second, sorry, and I'll keep answering.
So while Jed's looking at that, one of the things I was looking at here on this this just bar chart here. I was looking at the slope of the order flow, and this is just indicative of a trend day. Which just sticks in one direction the whole session. And in fact, one of the things that was probably foretelling today, and we saw this as an anomaly yesterday, is we were getting lower prices yesterday, but the order flow was to the buy side. What does that mean? That means that orders are placed where they're hitting the ask or lifting the offer as we were going lower. So that's an accumulation of longs letting it into today, and they've continued, although not as strong, but they've continued to the upside. So you see a significant turn in that. There's no way. And I at this point, I fully believe we're going to see 78. So up there, I might look to fade this thing at 78, or if we can get a lower low on a 30-minute first. So again, I'm still trailing. Every 30-minute is a higher high and a higher low, and we're just going to wait till I can get up here to 78 and then see what happens.
Yeah, and until it stops one time framing.
Mm-hmm.
So back to that IB question. So a lot of times too, Lars, it's not necessarily an IB break. It depends on the actual range of the IB. If we have a really, really wide IB, okay, and we keep stats on this, then we're less likely to take the breakout and look for the fade. In other words, we would look for the false breakout of the IB and then look to trade that back into the range, usually to the developing POC or maybe even lower than that.
Yeah, here's a perfect example of that, is that we've done 179 ticks in the NQ out of an average of 194. So you've got about 6 points of range in your average, but we've also done 77 points of range, and we're only expecting in the options market. Where's my? Come on, where's my? There we go. We were only expecting 86 points total today. So the options had priced in 86 points. You're at 77. So if you get the IB high break in the NASDAQ, I mean, could it go higher? But that's when JP says it's stretched. You're stretched statistically. Like you're not. And then you add where we are in relative relationship of price to value in multiple time frames. You're stacking probabilities against you, not for you. And so we're always looking to stack them in our favor.
Yeah, just think of this too. The probabilities is extremely important. We love that. Second of all, think about who's going where. That's part of. We have 4 questions that we always discuss before we take a trade. Okay, and then we talk about these in our community all the time. I guess ad nauseum. And so, but they really are true. And let me simplify this. Where's the market going? Who's in charge? And can you tell if they're in charge? And then my question to you is, do you want to try to fight that or go with that? The easier trade is to go with it, especially the other time frame traders, the larger traders, the institutions, the big banks that are pumping millions of dollars. You and I and Josh, well, Josh can move the meat markets, but you and I, we can't move these markets. We're small time traders in comparison to the banks and institutions. There's no way. I mean, we can do that. So we have to follow where and if you're on the wrong side of that market, then you got to get out quickly. All right, you're wrong. However, so we try to determine who's in charge, where's this market trying to go in, and then how good are they getting there. And then there's some days where these other time frame traders are just not there. They're just small algorithms pushing it around, and that's where a lot of times the chop comes from and stuff. So in that context, along with our probabilities, we can determine, okay, where's the easier trade here? What's best, the breakout or the fade on that? And both of those are actually trades that we encourage people to take. The IB is something that is watched by a lot of individuals and institutions on a regular basis, and it's used quite readily. And I'm gonna tell you, it's a lifesaver for a lot of people waiting that first 60 minutes, because the first 60 minutes can be really, really choppy in the U.S. markets. So anyway,
good word,
Lars. I hope that answers your question. You want to answer Carlos's?
different. So the two charting packages you're seeing here, one is Window Trader Blue, the other one is Investor RT. And I mean, primarily my focus is on Window Trader Blue in terms of, that's where I'm looking to really kind of narrow down and execute. I can look at, one that it pulls these real-time stats. I can really configure that however I want. They both use the same data feed, so you can use bar chart or DTN to feed both platforms' data. One of the things I like about IRT is that I can pull behavioral statistics. So a lot of the statistics that we lean on in terms of what's expected behavior or unusual behavior in the market have come from studies that we can pull in IRT. Also, IRT has the ability to do quote pages like this, where I can have, I can see in real time where's the cumulative delta. I can create custom indicators such as, what's the average range of the IB. So like down here, I can see in real time, how much IB range have we done versus what the average is, and then what's the cumulative delta on a number of these products. And then if I want to look at a more traditional chart for my planning, when we publish a plan every morning, really kind of there's 4 charts that I publish. So there's a daily chart, a more short-term chart that shows relationship to value on fixed frames. So over here is a weekly. This is weekly, running weekly value, and this is running monthly value. So you can see actually here in crude oil, we've actually moved. We came in this morning with weekly value higher. We've actually migrated that lower now to 55, and so we're now actually trading above that. So we're actually in what I would call moving into an extreme posture in crude oil in the short term, is that we're above value on multiple time frames. So it's getting a little long in the tooth for longs potentially, and I'm actually seeing them defend this area that we had in our plan this morning. IRT also allows me to export reference areas for our team every morning in our plans. So that's another reason that I use it. If you're not generating plans for other people, you can have Window Trader and that would be sufficient. But that's the 2 charting packages and why I like them.
Yeah, I'll just add one thing to that. There's a lot of charting packages out there.
Oh yeah.
And not one is better than the other. So don't feel like you need to have 2 packages. It's not.
Well, no, there is a caveat. There are some that are better than others.
Well, okay, yeah, I get what you're saying. Yeah, but
all right, I'm seeing some selling stepping in here. Crude. Okay. We're gonna look at crude.
Selling in NASDAQ too. They're actually pushing us down. So.
Well, let's see. Where do we have? We've got 2 hours till our next Fed guy.
Yeah, but we just stopped one time framing on crude or on NASDAQ.
All right, we're gonna look. I think NASDAQ's or crude's gonna try and go get these singles here. This looks like some good potential. Let's see if they can hold this. They can stop one time framing. That could give us an opportunity, especially if they could rotate back up, test 35 again. That would be fun. All right, we can get back to IB. Yeah, in terms of platform, so I can tell you one platform that is appears to have lots of bells and whistles and actually is inferior, and that is Thinkorswim from TD Ameritrade. Has yes. loads of indicators. We actually, a lot of us have accounts with TD Ameritrade just because of the alert function on our phones. We can use alerts a lot, but the data is absolutely terrible. And some of that is and this is not necessarily a knock on TD Ameritrade. Just understand who their primary audience is not somebody who's placing trades intraday. It's somebody who's more of an investor, has a portfolio of trades. They're trading some stocks every once in a while. They don't need really robust data, and so their data centers are actually in Texas, not in Chicago, which then means that there's some indicators that you'll never be able to get on Thinkorswim because they can't provide that type of data. And we've had yeah, go ahead.
I was just saying there's too much latency.
Yeah, too much latency.
Yep. So what is TD Ameritrade good for? They have a great options platform.
Okay. Yep.
Definitely use it for that. But I've never taken a trade through TD. Um, as far as like an intraday trade or even a swing trade, I have three options platforms I use, and that's not important here. Um, but I do execute options through them. So, man, they're really selling us off in crude.
Yeah.
See if they pull it back a little bit
I
here.
know that's what and it's with volume too. So let's
Yeah,
see.
so they're down the IB high right here. So,
Yeah.
all right, come on, boys.
So still divergent from value at 55. Now they could be that they just came down here to migrate value higher.
Yeah.
Which they've been known to do.
Yeah, turkeys. All right, let's see here to the downside. I don't know if they will or not. So. Come on, crude, keep going. Pop.
Yeah, pop up to like 30. Come on.
Yeah, that's what I'm thinking. Get up to 30, and then that's where I want to be.
So that's a big selling delta number. So this is like 1600 to the sell side. Notice the numbers of all the others have been like 100, 238, 400, 600. I mean like, and they were actually accumulating. These are all selling delta up here as they were making higher prices. So we were grabbing some sellers as we were making higher prices here.
Yeah, and if we can't pop the 30 here on this 5-minute, that just tells you there is sellers are in control right now. Now I won't chase this. There's no way I'm chasing this.
No.
I need to see it pull.
But this is now, where, hey, we're most likely not going to be trending now for the rest of the session, which can give us confidence to play at the edges. So this is an attractive price. This is an attractive price. This is an attractive price, to look to play back in. And so what we'd kind of like to see is we'd like to see kind of a drift of weaker activity back up in this direction, that finds some sellers before it trades back through the base here. This should get follow through.
Come on, boys, just a couple more. It's like they just stopped it after that little run.
Mm-hmm.
8 o'clock. Huh.
Come on, pop up. Just come up there. Come up a
I
little
know.
bit.
Is it that hard, guys? Come on.
Do the tombstone. Show me your face and I'll cure all your ills.
That's right. Oh, it's funny. So you may be asking, why don't we just take the trade here? Because that's not part of the plan. That's not a pullback trade. That's a chase trade. And if you've been on these calls before, there's this thing called dogs that chase cars. Don't do it. It ends the same way. So. Now they're trying. So the question is, if we get 30, where will we defend? 44 is where we'll defend.
Yeah, and we'd start getting nervous if we got above 38.
Yeah, for sure.
Come on, keep moving higher.
Yeah, no kidding. Come on, guys. That again, look at this, guys, and what's this telling you? It's really hard to lift those offers. If that's the case, then the sellers are really, this is just a small dead cat bounce, a little bit of absorption on this thing. And then, like Josh said, this thing probably should get some follow through, but it's got to get me in this thing so it can go. It's not allowed to go until I'm in. So, yeah, I'm kidding, of course.
Yeah, that's the story. Till you're in, it's not, you're not allowed. So
get
notice
in. So
the,
we'll get,
the delta numbers. This is 1600 to the downside. This is 43 to the upside.
yeah, that's terrible.
That's pretty weak.
Okay, kids, any day now. They're stacked up at 28. You see that?
Mm-hmm. Oh, beans came back. All right, we'll watch them and see if they can push out again.
Say we got 8:10, so we got to waste for another. So turkeys, doggone it.
All right, here's the 22.
Okay, if they take out these last lows, then I'm taking mine off. I'm done. While we're sitting here waiting patiently, does anybody else have any other questions? I assume. See, Josh.
Come on, come on, come on.
Peter, Tony T. Tony, hey, Tony T's in here. Hey, bud.
Go get that 15.
Seen you in a while.
Get those singles. Go get those singles and then go run. Oh, they just moved the VPOC. So this is the pull value up.
Yeah.
Now, if we, if they push to 55, they could move it back pretty quick, fast, and in a hurry. Still have not cleaned those singles yet.
No, they got a couple of them. So.
So now that they've pulled
that Russell is super strong.
Now that they've pulled the VPOC up here, that could allow, again, this makes this the area that could be more advantageous to play. Now, it's about 4,000 contracts. I mean, they could easily trade back here to where it was before and re-migrate this lower. So definitely want to defend that volume. Still really haven't gotten good follow through to the downside yet. And we still have some singles here right at the IB high that they have not cleaned. Tony, I see your question about, can you ask that? I don't know that I understand.
Check that out.
So watching the price actions in the right edge positive or negatively impact your longer term trading. So when I read that, I think what comes to mind is, does that impact your long, does it, I don't know how to
Well,
read
I
that
think what
question.
he's asking is just watching price fluctuate. Does that affect how we manage the trade and stuff? If that's correct, if that's what you're asking, Tony, then it shouldn't. I'd be lying if I said sometimes it does, but it shouldn't. And what I mean by that is that, hang on, what did you say? Yeah, okay. So here before, but you know, if I'm looking at price and getting scared of my trade, then I don't trust my trade. and the probably the number one factor of people not making it in this world of trading is they just can't accept, you know, losses. They can't accept being wrong, and that's a psychological deal. Can you overcome that? Sure, you can overcome that, but you have to get worried. You can't watch every tick.
Mm-hmm.
It's just with the algorithms the way they are, you know, this thing could run up to within one tick of your stop, turn around and give you a biggest winner ever. You just never know. and what you have to do is accept it. So if you haven't worked on your trade plan and your trade, and what I mean work on your trade, take that thing um, take that thing over and over again in sim. Okay, people say sim isn't good, and I agree, it's different. You're gonna get money on the line, it's totally different.
Mm-hmm.
You will watch every tick at the very beginning, but you have to replicate that trade numerous times. I mean, 100 times literally, to be able to get a good feel what that trade does. And
Yep.
if it fits in your book, you should know what that trade's going to do and what it can do.
Mm-hmm.
So that hopefully that answers your questions. Let's see here. The cyan and yellow lines on the window trader Bollinger Bands. What's those mean?
Those are not Bollinger Bands. Those are the dynamic volume point of control. So that's the value area. So this is the dynamic value area, and then this is the volume point of control. It kind of looks like Bollinger Bands, though, doesn't it? It does indeed. Oh yeah, crude's gonna puke here. Come on.
They're trying. Still like to see it pull back a little bit. I have no position still. 15, 17. So we still got about 14 minutes, 13 minutes to new session.
What's the NASDAQ doing here? So we have a lower low here in this does mean that there's opportunity today. If we can take out the IB high, I think that there's opportunity to fade back towards 81.47. So I'm going to have an alert up here, and all right, I am going to buy some soybeans here, gang.
I is not. I'm passing on the beans this week. Boy, crude just being tough right in here, man.
Yeah, yeah.
16.
What is that delta?
20.
Yeah, crude's just hanging there.
Right, here comes. Well, NASDAQ is maybe starting to roll over a little bit. Yeah, we're just hanging on that thing. We could go sideways on NASDAQ the rest of the day.
Let's see here. Hello.
All right, keep bringing questions if you have them. We'll take them while we're sitting here waiting for something to move. So here's a question I'll ask myself. What do you do when there's nothing going on?
Nothing.
Well, besides nothing, there's things you can do. Keep yourself busy. Put alerts in. Okay, if you know your areas, which you should, put alerts in. Okay, and either do one. Leave. Okay, leave your charts. Or what I do is I have a nice big screen TV TV above, and so I turn on a golf event or a football event or whatever is on, or maybe even a movie, I don't watch CNBC. I don't watch Bloomberg. I don't watch any of that stuff. Okay. Because it's just going to cloud your judgment, and they don't have your best interest at hand. You have your best interest at hand.
Yep.
So that's what we do. I'm waiting to be able to get alerts on my smartwatch. That way I can go take a run or something real quick, Eventually we'll be doing everything off stuff like that. Boy, that was a weird move. Crude just rolled over and died.
Okay, so I'm long soybeans, and my stop is 935. I'm long 937. What did I fill? 937. So stop 935. And I'm looking for a move away from balance, so I'm really kind of looking for like 950 area. But that 941.50 is kind of the first target.
Crude is really accepting price down here, so we probably going to get a move off it, just hopefully sooner than later. So my trade plan, guys, at 12 noon Eastern Standard Time on Friday, I start counting my money.
Yeah.
Which means I'm done. Win, lose, or draw. It just isn't worth it. I mean, unless we have major events happening and stuff like that, it just isn't worth it. And so I'm going to call it a week. And again, going back to what we discussed earlier, you're looking for a few trades that are going to make your week. Do you really, really think that they're going to happen on a Friday afternoon? And if they do, something happened in the world, or somebody said something, or somebody put a tweet out, and you by luck. That's not the kind of trade I'm looking for or trying to duplicate, because I can't duplicate that. So
that's right.
All right, they're going to hit crude now. Here they go. Here they go.
Yeah, they got the singles.
Yeah, well, that'd have been nice to be on that turkey, but I didn't get on. Oh, well. I guess another lesson there is, if you don't get on a trade, anybody who's in our channel who's on here, which I think there's a couple of you guys on here. So, Cyan. Thank you. Audiobooks. What do you mean by that, Michael? Oh, Tony, great question. Why do you trade soybeans cattle? Because Josh and I come from an ag background. So that's what we know. I mean, I was a ag trader for a long time, and Josh was a cattle hedger for a long time. So we understand those markets very well.
And the other advantage of those markets is that when nothing else is moving, or you have other types of events or stuff that you're waiting on, they can be markets that are in play.
Yeah, because they're not affected by certain things.
They're not as affected by some of things as other things, and so they can they can be liquid enough specifically the beans or live cattle in the ags are liquid enough and wide enough that you can get some pretty good opportunities in them. So we like them.
Yeah, so interest rates aren't going to affect the beans and corn. Okay, now China tweets may, but yeah, when we have like FOMC, corn and soybeans are probably not going to be affected by those by that decision. So
yeah,
not everything is correlated to the economic news events of the week. A lot of it is, but not all. That's a great question, though. I'm glad I've never had that one before. It's a good question.
It's a great question. I like it.
Yes, we do. Any questions, guys? We're getting to
Yeah,
the
we're
bottom
gonna
of the hour here, and let's wrap them up. If you got anything, we'll answer them, at least to the best of our knowledge. Other than that, it'd be, hope you guys have a great weekend, and hopefully it's not snowing in your neck of the woods.
Hey, I'm going skiing tomorrow. What?
Yeah. What's the base up there right now? Do you know?
Well, I was going to go to Eldora, but it looks like Mary Jane is open. So they're opening on Saturday.
Is
so
it really?
Yeah, so they've got 3 feet of base of natural snow.
Wow.
So
I want to go
excited
see
about that.
Winter Park live cams. Let's check it out. This is what we do while we're waiting for trades, guys. Hey, what's the live cam look like?
Yeah, right.
All right. Oh man, those are nice. Looking groomed. Love it.
Mm-hmm.
It's a bluebird today up there.
Yeah, it's gonna be. I'm pretty pumped about it.
Yeah, sweet. Sweet, sweet, sweet. I don't know how much the snowball has, but they've been talking tickets all the time. I think they got about a foot up there right now. It's been chilly, so they've been making snow. Yeah, they don't have much, so it's still sparse. You can still see grass. Bummer. The hardcores are probably there with their snowboard.
Well,
soon enough, we will get it.
That's it. All right, gang. Hey, thanks for hanging out with us. For those of you who are part of the community, we'll see you next week or even later this afternoon in Slack. And for those of you who are not, look for the recording to come out either today or tomorrow. And if you have any questions, ping us. Happy to.
Yeah, hold on. One last question Tony had. Are there less algos and quants in these markets? He's talking about soybeans and cattle.
No. There is just as many.
Yeah.
Hey, look at the. It's not this issue. It is the. Go grab the October 5th, 11th issue of The Economist. They did a whole spread on robots in markets, and you will find that better than 70% of all trading volume is run in all products. Equities, futures are run by machines. That is the world we live in.
And before we wrap up, I'll say this. Don't let that scare you, because we want those guys on our side. And that's why we do what we do, because if we get them on our side, which we typically do, things work really well for you. Yep. So don't be afraid of them. They're in the market. They're always going to be in the market. We just accept them. Doesn't mean you can't trade still. If you're on the wrong side of them, it's painful. But, that's what we do so we can stay on the right side of those things. So that's all I got, brother.
All right. Let's see.
Ski well. Break a leg.
Got it. No, that is the goal is not to. The goal is not to.
Oh, that's in acting. I'm sorry. Don't break a leg.
Don't break a leg in acting.
Wear your helmet. Strap that chin strap up.
That's right. All right, gang. Have a great weekend. Peace.
All right. Take care, guys. See ya.